Hi everyone, and welcome back to my channel, Mile High Stocks. In today's video, I'm going to be going over my top stock picks for tomorrow, March 9th, 2021. But before we get started, please go hit the subscribe and like buttons, and be sure to turn on notifications. The first thing I want to go over is the current market condition. We are still in a market correction from last week. I am currently down on several positions, but I am still holding Tesla as well as Amazon in my Roth IRA, and I took advantage of the continued drop in today's market and added some more positions for swing trades later in the week. I will be going over each of those stocks specifically. Before I get started going over my portfolio and the stocks that I'm looking at for tomorrow, I want to discuss how to approach investing in the current market correction. There are several rules that I follow for myself and before I invest in any stock. The first is I never use margin when swing trading. You can never guess the current market bottom or when the market will reach its bottom before it decides to go back up and increase in value. And because of that, you should not use margin when investing or swing trading because it is a recipe for disaster and you can very easily blow up your account before the market actually reaches its bottom. For example, if you would have invested in Tesla on Friday afternoon and used margin thinking the market will go back up today, Tesla decided it wanted to drop further for Monday, March 8th, 2021. As a result, all that money on margin, you could have very easily received a margin call for today because the market has not actually reached its bottom yet. Even though I and a lot of investors are buying dips and buying these stocks at extremely low prices, it does not mean that the stock can go down further. So that is the first thing or first rule that I force myself to follow when investing during a market correction. It helps me have proper risk management to prevent from blowing up my account. And once again, that rule is do not use margin when investing during a market correction. The second rule is to have a diverse portfolio. I do not throw my entire portfolio into a single stock. I have several stocks that I am looking at to keep a diverse portfolio, and I'm usually trading around 100 or 200 share sizes, depending on the stock price. And the third is do your research and do your own research. Even though you're listening to me and other YouTubers, always be sure to do your own research and do not blindly follow me or anyone else on your own investments. Do your own research, look at the news, look at the stock charts, and decide whether it is a good investment for you. One of the stocks that I added today to my portfolio was NIO, the electric vehicle company based out of China. I am still bullish on the electric vehicle stocks such as NIO and Tesla. I do believe they are undervalued right now, and they will bounce back up in the next several weeks. I am currently long 200 shares for an average price of just under $37 a share. Actually right around $36.80, I believe. And it's currently at just over $35 a share. What I am looking at is the daily chart on the Thinkorswim platform. I have a long trend line here from when NIO popped back in June. And as you can see, it is currently right at that trend line. It is converging on the long-term trend line, which it has bounced off 1, 2, 3 times. So this is the fourth bounce. So not only is it bouncing off the trend line, it is also converging at the 200 exponential moving average. Because of these indicators, I am long 200 shares and I am looking for a price target of over $40, and where I will begin taking profit over $40 and set a stop loss below the moving average. But my current price target is back to $40 to $45 in the next, or at least by the end of March. As you can see, you also have 1, 2, 3, 4, 5, 6, 7 red candlesticks in the past 8 days. So this is very much oversold right now. I'm looking for critical support off the trend line, which I mentioned, and I'm looking for a move back up to $40 to $45 per share. The next stock I invested in today was ACIC. If you recall from one of my previous videos, ACIC is a special purpose acquisition company that is dealing with or at least trying to merge with a helicopter Uber company. So it's basically a company that is very similar to Uber, but for flying helicopters. Now then, SPACs, they have critical support at $10. Because they are a SPAC, they do not go below $10. If they do, they immediately bounce back up, which is why you see the absolute low is $9.73. But when it did drop there, it immediately came back up above $10. So $10 is the critical support line for a special purpose acquisition company, and I got in at the stock at just under $11. I felt it was safer to get in on a stock like ACIC. I just invested 100 shares. I just put 100 shares into my portfolio to manage risk, but I wanted to get this stock as close to $10 as I could before it continued to pop up again. The third stock I went long on today is CTRM. This is a penny stock, so I was able to get 1,000 shares for under $1,000. I did not want to go higher than that in terms of share size because it is a penny stock. I did that just to manage risk, so it was a small percentage of my portfolio. But the reason I went long on this stock is because you have a high of $1.95 the last time it popped. It's only popped once. So usually a penny stock that is popped once has the chance to pop 2 or 3 times after that, and I wanted to get this under $1 a share as it was near the 50 moving average and converging as well above the 200 moving average. And as you can see, it is currently holding above the long-term trend line that goes back since the end of December. As I said, I put 1,000 shares into this, and I'm looking for a price target or a profit target of $1.20 to $1.60. Those are the only stocks that I entered long positions on today for March 8th, 2021. Every other stock that I will go over for the rest of this video are stocks that I'm watching for later in the week, but have not actually entered positions for yet. The 4 other stocks that I am keeping on watch list are ABML. As you can see on ABML, we have a descending trend line here. ABML was up over 15% today, but it looked to bounce off that descending trend line. So I want to wait for the break of that trend line for an entry. The second stock I am keeping on watch list for the rest of the week is Shopify. E-commerce is a huge part of COVID right now, with everyone wanting to purchase online, and Shopify is one of the largest platforms for people to sell products online. So I am looking to see if we can get an entry point right around $1,000 a share on Shopify. The other one I am looking at is AMC for a second short squeeze, back up to maybe $14 or $16. That's not guaranteed though, so that's why I haven't actually entered a position there. And the fourth stock I am looking at for the rest of the week is Zoom. Zoom has officially been holding underneath the 200 exponential moving average, and it looks like the 10 EMA is going to cross the 200 exponential moving average. So I am looking for a dip trade under $300 a share on Zoom. Those are the 4 other stocks that I do not have a position in, but that I am keeping on my watch list. That is all for today, folks. Please, if you have not done so already, go hit the subscribe and like buttons, and be sure to turn on notifications for when I upload future videos. I will be uploading a video every single day this week to go over the current market correction, as well as any future stocks I wish to put on my watch list. Have a great day, and I hope to see you again in my next video.